Sam, thank you. Happy day, everyone. Just what we wanted to talk about, fair lending. We know that everybody thinks that bankers are really sneaky, nefarious people. Well, most of us aren't, but a lot of people seem to think we are. And unfortunately, not only are we the most regulated industry in the world, but we have to maintain documentation to prove our innocence. So it's a little different from a true democracy. It's not. So today what we're talking about is how you, as the financial institution itself, what we're doing here in order to test as we go, because you want to make certain sometimes what the data looks like it's saying might not be what it really says. And so doing internal monitoring, this is something that will help you as a financial institution, whether you're the auditor, whether you're the senior risk officer, whether you're just someone at the bank who wants to keep us out of trouble. This will assist you in what we're going to talk about today in figuring out how to do that, because frequently I have people ask me, well, how do I do that? I don't know anything about regression analysis. Well, we're going to leave that. That's a whole separate thing. This is what you can do at your financial institution that will tell you whether or not you have a problem, whether it looks like you have a problem, or if you're squeaky clean. If you find out you're number 3, you're probably not making any loans. So today we're going to go through some samples, some ideas of how to do this. When I respond, after you send your written questions in, and I respond to that in writing tomorrow or Monday, I will also include a sample report. That's something I didn't provide ahead of time because, if nothing else, I kind of wanted to get a feel for what kind of questions we're going to get, and if maybe that's something I need to address within that. So as it is, this is basically, I use an Excel spreadsheet or some other type of DAT file that I can sort. That's how I actually do my analysis, and so everybody's system is going to be a little different. So I didn't include those specific work papers, but that's what you would use. So let's talk about this. As we go along, just remember you can submit those questions anytime. We're going to talk about developing some simple work papers and spreadsheets to help identify potential problems. So these are going to, I've never done a fair lending review where I didn't find something that looked odd. It's a lot like when I do BSA anti-money laundering. Invariably, I run across something that doesn't look right, but when a banker provides me with the explanation, it makes sense. Well, the same thing with fair lending, but sometimes these things are sitting up in our heads or in the lender's head, heaven forbid, and we need to get it down in writing. We need to quantify it. And so that's what we're going to be doing. We're going to also assist you in how to implement easy, proactive, and preventative measures. Now, these are easy as long as no one else is digging in their feet and kicking and screaming. That's your problem. And we also want to talk about avoiding the mistakes of others. By seeing what other financial institutions have gotten their hands slapped on, this is something that I review regularly. I do, searches for this periodically because it tells me where my clients might go wrong. You also can see where there's a new emphasis, such as when indirect lending came up, and now we've got UDAP. It's a new play pretty, and UDAP can feed into fair lending. And so we're going to talk about some of those. So let's just dig in, strap on that seatbelt, and we're going to get started. What we're doing at first, before we do this monitoring or audit or test or whatever you want to call it, you need to look at a focal point. Now, you can look at several focal points, but it helps if when you're starting, you start out with one. And there are numerous focal points because at any point in a life of a loan, starting with the advertising, you can be alleged to have violated the fair lending requirements. So even an ad that might be discouraging. And when I do fair lending reviews, we go out and we look at your websites. I want to see your ads because I want to see who it is you're marketing to, and could you in some way be sending out subtle discrimination signals. And so here we're going to look at our actual loan process. Are you going to look at originated loans? Are we going to look at denied loans? We're looking at indirect. We look at refinancing. Modifications, these are a big deal now because remember, it's not just whether or not you make or deny the loan that you consider one of those prohibited bases, but it's how you treat me throughout. And if you'll go out and do a little Google on Bank of America or Chase or any of the big boys, you'll find that some of the modifications that were being requested, they were treating them differently, and they were doing it on a prohibited basis, or at least it looked like they were. So you want to look at every point. So you might not want to do all this at once. You might want to look at your approved versus denied first. Then you might want to look at originated loans, and I want to look to see my underwriting. Am I handling those correctly? How am I handling refinancing requests? How am I looking at modifications? Are we treating everyone the same? Do we have the same requirements? You're even going to look at your collection process because I want to make certain that not only are we looking at fair lending for collection process and foreclosures, a lot of these bleed into other areas. And this can bleed into SCRA, your service members. We want to make certain that we're handling these correctly, the collection process. And please remember, I am talking about all types of loans. Reg B, Equal Credit Opportunity Act, covers commercial and consumer. It also includes, let's say in the collection process, we're talking about any type of loan. We're not talking just about housing loans. We're talking about car loans. We're talking about unsecured loans. We're talking about CD secured loans. Heaven knows how we can mess those up, but I've seen banks do it. So shame on them. We'll talk about that. But we're also looking at, let's say, collection process. I had one bank that had a policy that if a car loan within a certain census tract went more than 2 payments past due, they did an automatic repossession. If it was in any other census tract, it had to go 3 payments past due before they issued repo. Now, as it ended up, what their allegation was is that, well, we have a higher skip rate in that first one. You have to be able to prove that. You can't just say or think. You have to be able to prove there is a business purpose. Because more than likely in that specific census tract, you might have a lot of covered individuals. You might be doing this based on that there are primarily Hispanics or non-whites, Asians, whatever in that area, low to moderate income, which might end up being a lot of single parents. And so you want to be very careful that you truly have a business purpose. So when you and I are doing this monitoring, this raw data is going to show us one thing. Maybe the policy is going to show us something. But then we need to not just automatically assume that that's discriminatory. I need to see if there's some hard facts behind it and that we help get this supported. The nice thing about knowing that we're doing the internal monitoring is knowing that we are helping our financial institution provide the documentation that isn't there. And so we're helping, not as a hindrance. People say, yeah, but I don't have time for that. Well, you're going to have time when the examiners show up. So let's go ahead and do that. All right, so we're going to choose our loan processing point. At what point are we going to be doing this? And again, I wouldn't try to do all this at once. Take it piece by piece, and then go back and do some more. If you try to bite it all off at once, you're going to get choked. So now I have a decision point. Was it in the origination? Was it denials? Was it for refinancings, modifications, collections, foreclosures? Now I'm going to have to choose a focal point, something that within there, now I know what it is I'm going to be comparing. So to do that, you're going to look at a number of issues. We're going to look at risk factors. And so your risk factors, if you're doing your risk assessment, that here what we're looking at is what is our highest risk? Well, all depends. One of my banks is very much a P&E, professional executive. And so they have very little consumer. So sometimes they forget that when they're thinking it's not consumer, they have a lot more risk in some of those P&Es because they might not always offer all those cool little perks of being a P&E to everyone who fits into that criteria. So, example, if you were under their definition, a P&E customer,